Hello 10%ers, this is Michael with Trading Escapes. This is the first video in a series of videos in the development of a new trading strategy, new setups. It's going to have new setups, new trading plan. As you can see on the screen, we have a stock from the day. We have some indicators laid out on the chart, and I'm going to just go over real quickly what we're looking at and what we're thinking about for the setups. Later on, we'll make more videos as this develops. This is just the documentation process of documenting how the strategy develops. Anyway, so let's look at our studies real quick. As you can see, we've got four things going on here. We got an RSI crossover. Okay, we got it set to let's get into the settings. We have a length of 3, threshold of 70, and we're going above, right? So as RSI comes up, we cross over and we get an orange indicator. So let's look at that on the chart real quick. As you can see, we've got our orange indicators here, right? And got one here, 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 and here. So in a 2-period RSI, right, as it breaks 70, okay, so this is the RSI on the bottom here is a 2-period RSI. So 70 is right about, 70 is right here. You can see this level right here from 0 to 100. And you can see as it comes up here, we're breaking 70, we get an indicator. Jumps back down, it's coming up here, breaking 70, we get an indicator. Comes back down, breaks 70, we get another indicator. So that is where our first trade indication is taking place. Now, let me back up. That could be our first indicator for entry or our second, depending on how it's setting up. So let's go back into studies real quick. So that was our RSI crossover. And a little correction, that's on a 3-period, not a 2. And our RSI on the bottom is on a 2-period. Our RSI histogram down here is being used for exit confirmation primarily at this point. So let me look at an example here. So let's say we have an entry indicator here, right? And that's not the complete setup, but let's just say we get in on this candle here and we're riding up and we see that we get into this candle right here is our first red RSI oversold. So as this candle forms, we're going to start to see this right here. As we get into this oversold, that is our exit indicator. Now it can be quicker or slower depending on how things are setting up. Obviously, we've been in this trade for a little bit. We get into oversold, we may want to hold for just a little bit longer. But let's move over here and look at this trade. Let's say we get into this trade and we're already, as that candle's forming, already into RSI oversold. So we'll probably want to get out quickly. We'll want to take a quick scalp. It probably get more than a scalp. If we define scalp as having a more than a 2 to 1 profit to loss ratio, you know, our loss here would be at this blue line, right? Which is our right here. This is our moving average, triangular moving average. So that's where our entry would be here, which is a 9-period. On this chart, it's a 9-period exponential moving average. Entry here is at 59, exit at 50. So we got a 9-cent stop, right? And if our entry is at 59, let's just say round it out to 60, we have a 10-cent, 20-cent, almost a 30-cent pull from our entry. So, you know, probably be a scalp. It's a little bit over 2 to 1, I would say. Let's say this is a $500 trade. Anyway, we're getting sidetracked. The point is what we're using the RSI histogram for. RSI histogram is an indicator to exit the trade. Okay, as we get into oversold, overbought, we're looking to get out of the trade. Okay, so let's go back to our studies. So we've gone over the RSI crossover, which is an entry indicator. the RSI histogram, which we're using as an exit indicator. Now let's look at these lines we have going on here. We've got 3 lines. We have our moving average triangular set to a 10 period. That's the blue line. We have our moving average weighted set to a 9 period. That is the red line or pink line. So let's look at them on the chart. Basically what's happening is we're looking at the second indicator for entry are these crosses, right? Got a cross there, got a cross there, sort of a cross here. So when we're in a trade to the long side, we want to see red over blue. When we're in a trade to the downside, we want to see blue over red. It's quite simple. That's all we're using that for. So now let's look at the setup a little more detail on this first trade. We have a cross right here, set up phase 1. We have an indicator right here, set up phase 2. That tells us to enter the trade. That's an entry right here. Cross on this candle, indicator on this candle, enter the trade. Now, the entry point is still being developed. So on this right here, it's fairly clear. So this cross is going to happen on this candle. This indicator is going to happen on this candle. Our entry is going to be at the EMA. The yellow line is the EMA. Now, there's a little back and forth. I'm using the 13 EMA possibly for later day trades or higher cap trades, or both. It depends on which one. We're still trying to figure that out, where exactly it will be positioned. The 9 EMA is being used more for earlier trades, say the first 30-minute opening range, or low stock or low float. So there again, so a low cap versus a high cap, morning range versus the rest of the day. That's what I'm playing around with the entry EMA line. So you can see this MTEM is a well, it's not a penny stock because it's over $5, but you know it's a low cost stock. It's a low low cap and has a low float. So watch what happens when we change this 13 to a 9 for our entry point on this first move. See what happens right here? So we have the cross, we have our signal, and we have an entry point. The entry point is at the EMA. If we miss the entry point, we wait for a pullback to EMA. If it doesn't pull back to the EMA, we lose our entry. There is no trade. Now, where do we don't trade on the chart either. We're going to be trading over here. We have our EMA. We have our weighted. We have our triangular. This is what we're looking at as this is forming. We're looking for the cross. The cross is, you know, if we're trading with blue over red, triangular over weighted, we're waiting for a long. That's going to swap. We're going to see weighted over triangle. So let's just use the colors for simplicity. Red over blue. Entry at exponential. That's the trade. Where's our stop? At weighted or triangular. So let's say if we were trading right now, our entry is at 39 with a stop at 35. And where's our exit? Our exit, we're paying attention down here to the RSI. Now, second exit indicator is a recross of the 2 moving averages. So let's say we didn't get out of this trade and we held it all the way through all this action. This would be the exit point then. Once we've crossed this, or once these have touched, basically. So when we're watching the tape over here and we see these two merge on a price point, we're basically anticipating a cross. Now it's possible if you look at this right here, that can happen and it goes right back. But this would be an exit, and you can see we have a re-entry right here. All right, so let's change this back to a 13 EMA. So the 13 We'll change it back to a 13. And you can see how it changes and our entries become a little less clear. See, we have this way down here. You know, that's probably not a good entry because this cross is going to happen as the price action's way up here. We're never even going to get close to that EMA now. You know, this is gonna rip without us. Now we could get into this short. Again, I don't have an RSI indicator for shorts yet, but if we just use our moving averages, you can see we have a cross. We have blue come over red, entry right here with an exit, with a quick exit because we're in RSI oversold, right? So we're looking for a quick scalp. Entry here, quick scalp. What are we risking? Well, that's a big risk on this actually. So we're at 20 cents. We would probably pull our risk back and start our risk at this line here. So we have about a 10-cent risk and we're looking for a 2-to-1. So 75, you know, so we're looking for a scalp at 55. So right there. So we enter here to get out here. Why are we scalping? Because we're entering into RSI oversold. So we're just going to take a scalp. Versus this trade here, right? We're not in RSI oversold. So we're in and we wait, get into RSI overbought, excuse me, and we have an exit. So that is the strategy. Now the trading plan is going to involve some other pieces, right? So what stocks are we trading, right? What's the catalyst? Are we trading momentum stocks with this? Are we trading high? You know, that is all being worked out and coming together, and we'll work that out in further videos. Right now, let's just focus on the 5 indicators that we have on the chart. We have a moving weighted, we have a moving average weighted, we have a moving average triangular. That's the red and blue lines. We have a moving average exponential, that's the yellow line. We have an RSI crossover indicator on the chart, and we have an RSI histogram. What are they used for? Entry indicator right here is as these 2 moving averages cross. Entry indicator right here as this RSI triggers. Entry point right here of the price action at the exponential moving average. What are we using histogram for? Exit. Exit overbought, exit oversold. So that's what we have so far. This is not a new strategy for us. I actually kind of, I won't say invented, came up with this 6 months ago, played around with it, and some other pieces to it weren't coming together. This strategy, I can tell you right now, doesn't work great if you try to trade it off of the chart exclusively, because it is very hard to read when these actually cross and when you get to your EMA. It looks simple. You know, we got a static chart here. It looks, you know, hey, there's a cross here. We cross, yeah, well, all good to go. It's not that way with live action, with the price action jumping back and forth. You really need to use the window over here, this active trader. You have to have the active trader. You got, when you're trading this, you glue yourself to this right here. You watch for the cross, you get on the entry, you set your stop, and you exit with the RSI or the moving averages recross. We'll call this strategy some sort of KrissCross. It'd be called KrissCross something or another. So anyway, that's the first video. Still working on it. There'll be a series of videos, and maybe at the end of it, we'll take all the videos and combine them into one long video to go through the whole strategy once we feel that it's a profitable strategy and everything's working. So until next time, this is Michael with Trading Escapes.